Keurig Dr Pepper, ticker symbol KDP. In this video, we are going to look at the intangibles, the finances, and run some valuation models to determine if it's a delicious or a disgusting dividend stock. So Keurig Dr Pepper is actually the third largest beverage company in North America after Coca-Cola and PepsiCo. They get all the attention, nobody really looks at KDP. And fun fact, Keurig and Dr Pepper were actually separate companies that merged back in 2018. Now KDP has a diverse portfolio that covers premium water brands, coffee labels, sodas, juices, teas, and energy drinks. Every beverage you can think of except alcohol. Funny enough, as a kid, I drank Hawaiian Punch like it was my oxygen source. Also, other companies pay KDP a royalty fee if they want their product in the Keurig pods. So this is a channel that is focused on dividend compounders. So let's check out their dividend over the years to see if it is indeed a compounder. So it looks like in 2013, they paid $2.11 annually, and ever since then, they've been just increasing it year over year consistently. This is phenomenal. So let's check out their dividend profile. It looks like their payout ratio is 62%. That is pretty healthy. Dividend growth year over year is sitting at 6.89%. The annual dividend yield is 2.78%. It's nothing to write home about, but it is growing and it's healthy. All right, so let's take a look at the management team to see if they are shareholder oriented. Like, are they focused on the success of the company? Are they owners of the stock? And if they are, what are they doing right now? So as of recently, October 27th all the way to November 8th, it looks like there are people that are buying within the company, the chief R&D officer, the COO, but it does look like one individual, the president of the U.S. Refreshment Beverages, he did sell 16,000 shares, but the other executives do look like they are buying right now. Next, let's take a look at the most recent earnings report, and the highlights include nearly every metric has grown year over year except sales in their U.S. coffee segment, but they beat their estimates for their EPS and their revenue expectations. So the top and the bottom line, good to go. Despite the slight decline in coffee, the leadership has confirmed the full year guidance for net sales growth of about 5.5%. Next, let's go ahead and take a deeper look at the technical indicators. And it does look like in the month of October, KDP was oversold, with RSIs ranging from 22 all the way to 29. It was oversold. However, it does look like once it hit the lower Bollinger Band, there was a line of support, and now the stock is rebounding. This is a good thing to see. All right, now let's run some valuation models to determine the intrinsic value, and then compare that to what Wall Street analysts think the price target is. The first one is going to be the multiples valuation. Essentially, we are taking similar companies in the same industry to derive a stock price. I use PepsiCo, Coca-Cola, Monster, National Beverage Corp, LaCroix, and Vita Coco Company. And from that, we got a median PE ratio of 29, which gives us a final intrinsic value from the multiples valuation, $39.87 for KDP. Moving right along, we are going to do the discounted cash flow analysis model. Essentially, we are taking the year over year free cash flow growth to determine an intrinsic value for KDP. It does look like the average cash flow growth rate is 12.44%. However, I do want to be conservative and use a safe number, so I divided that by 2 and plugged in 6.86% going forward. With that, and taking some numbers from the balance sheet, we derive a DCF price of $32.74 per share for KDP. Moving right along, I hope you're keeping up, is the dividend discount model valuation for KDP. Essentially, we are looking at the dividend growth year over year to determine an intrinsic value for KDP. So it does look like the average dividend growth rate for KDP has been 9.79%. However, I do want to be mindful and conservative and safe, so I am chopping off 3% from that and plugging in 6.18%, which gives us an intrinsic value for the DDM, $50.17. Now, I do want to call out, if I did plug in the 9.79%, this would be much higher, but we are going to go with conservative numbers. Next is the Graham's valuation model. Essentially, we are going to find the intrinsic value based on its growth rate projection and the current AAA corporate bonds yield rate. So based on those numbers, the Graham valuation is $15.70. So let's see what the intrinsic value for KDP actually is, and will it be a delicious dividend determination, or is it going to be disgusting? Drum roll, please. The final valuation is $34.62. Now let's compare our number to what Wall Street analysts think. Wall Street says that KDP is worth $37, which is a 19.47% upside to its current trading price of about $30. The low forecast is 33, the high forecast is 42. So when we look at our valuation, we are on the lower end, and that's because we used safe and conservative numbers. So let's figure out what the ideal buying price is. With a 10% margin of safety, your buying price would be $31.16. However, if you do buy it at its current trading price, what is the margin of safety that you get with it? It's usually about $30 plus or minus a dollar or two, right? So I'm going to go ahead and say it's 13%. Okay, you get a 13% margin of safety if you do buy it at its current trading price. However, if you do want to play it safe and you say you like a 20% margin of safety because you prefer that buffer, that delta, then you are looking to jump in when it is $27.70. So in the end, what is our conclusion? I definitely think that KDP is a good alternative compared to KO, which is Coca-Cola. However, there are better dividend stocks out there with higher yields. With that said, whenever KDP reaches that 20% margin of safety and hits a price of $27.70, I might buy a few shares here and there. So in the end, I do think it is a delicious dividend determination. However, it's not the greatest. If you like what you are hearing right now, then please do your own due diligence and research to determine if it is a delicious dividend to you. This has been Dividend Compounders with Cheese, signing out. Stay safe, and I'll talk to you next time.